There's a story buried deep in the archives of a London prop firm, a story that's quietly whispered among traders who've been around long enough to lose everything and come back again. His name was Daniel Rowe, a 26-year-old who walked into the trading floor with nothing but a laptop, a $5,000 account, and a stare too calm for someone who didn't know what he was about to face. In less than 12 months, Daniel turned that $5,000 into $500,000. No secret fund, no insider tip, no algorithmic advantage. Just an ordinary trader who somehow saw the market differently. What's more haunting isn't Daniel's success, it's what came after. On the same floor in the same firm were veterans who had traded for 10, 15, even 20 years. They were battle-scarred, seasoned, and yet their equity curves looked like EKG charts. Up, down, dead flat. They couldn't explain it. How could someone who barely knew what a Fibonacci retracement was outperform traders who had survived flash crashes, S&B shocks, and liquidity crises? Some said Daniel was lucky. Others claimed he caught a rare bull run. But when I sat down with him years later, after he had left trading for good, he said something that still echoes in my mind. The market doesn't reward experience. It rewards clarity. And that single sentence shattered everything I thought I knew about trading. Because the truth is, it's not about how long you've traded. It's about how deeply you've unlearned the wrong things. So tonight, we're not going to talk about indicators or strategy tweaks or how to read candlesticks better. We're going to open Daniel's file and dissect why some traders awaken within a year, while others spend a decade lost in the fog. And maybe by the end, you'll realize that the market was never your enemy. It was your mirror all along.
When Daniel first entered the trading floor, he didn't look like a prodigy. He was quiet, almost invisible. While others bragged about their setups, argued over macro trends, or compared drawdowns, Daniel just listened, notebook open, pen in hand, jotting down fragments of conversations that others ignored. He wasn't trying to impress anyone. He was observing. During his first month, he didn't take a single trade. That alone raised eyebrows. In a firm where new traders were told to get screen time, take risks, and learn by losing, Daniel did the opposite. He watched. He recorded. He treated the market like a living organism, breathing, pulsing, and sometimes attacking without warning. At the end of every trading day, he'd print the charts of the instruments he tracked: Euro USD, SP 500, and gold. Then he'd highlight one thing: where emotion entered the market. While the others focused on candle patterns and entries, Daniel was mapping human behavior, the moments where fear took over logic or greed pushed beyond reason. He began to notice something eerie. The same emotional patterns repeated, again and again, regardless of the instrument or time frame. That was his first real breakthrough. He realized trading wasn't about predicting price. It was about decoding behavior. I remember asking him once, "How did you learn that so quickly?" He smiled and said, "Because I never tried to be right. I just wanted to understand." And that's where most traders fail in their first decade. They chase confirmation instead of comprehension. They build systems to be right, not to learn. They take losses as personal insults instead of feedback from the market's intelligence. By the end of his third month, Daniel finally placed his first live trade. It wasn't special, a small short on the NASDAQ during a minor pullback. But the entry was surgical. His stop loss was precise, his risk tiny. When the trade hit target, he didn't celebrate. He just made a note on his pad. Pattern of euphoria. Retail long exhaustion confirmed. The market did what it always does. He wasn't trading charts. He was trading human nature. And that, unknowingly, marked the beginning of a transformation. Not just for him, but for everyone who watched him from afar and couldn't understand why his screen looked no different, but his results were from another world.
Daniel's first year ended with something unusual, a steady equity curve. Not spectacular, not explosive, just a quiet, upward line. In a world obsessed with 10x months and alpha runs, that kind of curve didn't get applause. But to veterans, it was a sign of something rare, emotional consistency. Then came 2020, the year when the market forgot what normal meant. When the pandemic hit, volatility didn't just increase, it erupted. Liquidity evaporated, spreads widened, and correlations broke. Traders who'd been profitable for years found themselves staring at red screens, confused by a market that no longer followed their rules. Daniel didn't escape the chaos. He took hits like everyone else, but the difference was how he reacted. While others tried to fight back with bigger trades, Daniel went silent again. He spent 3 weeks not trading a single lot. Instead, he revisited every mistake he had made, searching not for what went wrong, but why. That's when he uncovered what he later called the illusion of control. He realized most traders don't lose because they lack skill. They lose because they believe they can control outcomes in a system designed to humble certainty. He wrote in his journal, "The moment I think I know what the market will do next, I've already lost." And so he rebuilt his approach entirely. No more forecasting, no more predicting, just reacting, intelligently, systematically, without ego. He structured his process around 3 unbreakable rules. 1. Observe longer than you act. 2. Size smaller than you think. 3. Exit sooner than your ego wants. Those principles became his anchor during the storm. When others got whipsawed trying to catch every swing, Daniel waited. He'd often say, "The market always reveals itself. The trick is surviving long enough to see it clearly." By late 2020, his patience paid off. While retail traders were blowing accounts during meme stock mania, Daniel quietly caught one of the cleanest moves of that decade, a structured long on gold futures from $1680 to $1980. It wasn't luck. He'd noticed weeks earlier that while retail sentiment was collapsing, volume footprints showed accumulation by silent hands. He didn't know the reason, he didn't need to. He trusted the behavioral signal. That trade didn't make him rich, but it made him certain. Not in the market, but in himself. He finally understood that trading success wasn't about intelligence, capital, or even strategy. It was about mastery of reaction. I once asked him how he stayed calm when everything around him burned. He replied, "Because I don't need to be right to win. I just need to stay in the game longer than those who think they do." That was the moment Daniel stopped being a new trader. He became something else, a survivor of chaos, fluent in uncertainty, and unshakable in a world built on randomness. That was his turning point. And ironically, it came not from a winning streak, but from embracing the humility of being wrong again and again until wrongness itself became his teacher.
There's a peculiar silence that comes after survival, a calm that only those who've lost enough can recognize. For Daniel, that silence became his new workspace. He started noticing something he had ignored for years, the rhythm of failure itself. He saw how most traders, himself included, weren't just repeating mistakes randomly. They were trapped in a cycle, a psychological pattern that felt like trading, but was, in truth, emotional gambling disguised as analysis. Every losing trader, he realized, follows the same hidden script. 1. Euphoria after a win, believing they've figured it out. 2. Overconfidence trade, bigger size, worse entry. 3. Sharp loss, shock, denial, revenge trade. 4. Emotional exhaustion, fear, hesitation, self-doubt. 5. Brief recovery, small win reignites step 1. It wasn't market randomness that destroyed them. It was emotional recursion, a loop that feeds on hope and pain. To test his theory, Daniel spent months reviewing public trading data, MyFX book accounts, and Reddit trading journals. And the numbers painted the same picture. Over 80% of traders weren't losing because of poor strategies. They were losing because of consistency collapse after wins. Success itself triggered their downfall. It was as if the market used victory as bait. So Daniel built what he called the pattern mirror, a handwritten log updated daily. Each entry had 3 columns: market condition, what the chart said; emotional condition, what he felt before, during, and after; and behavioral outcome, how emotion influenced execution. Within 2 months, the mirror revealed something terrifyingly consistent. Every time he felt certainty, he underperformed. Every time he felt uncertainty, he executed flawlessly. The pattern was clear. The less he trusted himself, the more he aligned with the truth. It was the opposite of what motivational gurus preached, but it matched market reality perfectly. The revelation forced him to shift again. He stopped trying to build confidence. Instead, he built awareness. He would often say, "The goal isn't to feel good when trading. The goal is to feel real." That single insight changed how he saw everything, from charts to people. He realized that markets are just reflections of human nature at scale: greed, fear, hope, denial. Every candle was a confession. Every spike was an emotional outburst frozen in price. And those who learned to read the emotions beneath the data, not just the data itself, gained access to what he called the invisible layer of truth. By late 2021, Daniel was no longer impressed by indicators, algorithms, or fancy dashboards. He could read raw price action and feel the crowd's psychology: panic building before a stop run, exhaustion after a parabolic move, greed leaking through liquidity zones. He once described it like this: "It's not about predicting the next move, it's about sensing when the crowd's illusion is about to break." The market, he realized, wasn't random at all. It was structured chaos, orchestrated by human emotion, the most predictable force on Earth. That understanding, that pattern beneath patterns, was Daniel's edge. Not a strategy, not a setup, a worldview. It was the quiet recognition that the market doesn't reward intelligence or prediction. It rewards emotional asymmetry, the ability to stay calm when others panic, skeptical when others rejoice, and patient when others demand action. That's when Daniel stopped looking for entries. He started looking for disbelief. Because disbelief, he learned, is where true moves begin.
When Daniel began to understand the emotional architecture of the market, he realized that trading success was not built on strategies, it was built on structure. He called it the framework of mastery, and it had nothing to do with signals or setups. It was a mental operating system designed to protect him from himself. There were 4 pillars: discipline, detachment, data, and duration. 1. Discipline, the foundation of trust. Most traders think discipline means control, avoiding mistakes, forcing patience. Daniel saw it differently. He realized that discipline was not about control, but about consistency under chaos. He built routines that were immune to emotion. Same chart time, same journaling format, same risk per trade every day, even when he didn't feel like it. He used to say, "Your edge is not what you know, it's what you can repeat when everything breaks." And slowly, through repetition, his mind learned that safety wasn't in outcomes, but in the process itself. 2. Detachment. Trading without identity. Every losing trader, Daniel noticed, was attached to opinions, to trades, to being right. The moment they were wrong, their identity cracked. He began experimenting with a radical approach, ego fasting. For 30 days, he would place trades without naming them, without labeling setups, without calling them his idea. He simply followed structure and noted results. The outcome? Freedom. Once detached from the need to be right, he could see clearly again. He wasn't fighting the market anymore. He was listening to it. He discovered that detachment wasn't cold or robotic. It was clarity under uncertainty. It allowed him to adapt faster than others, because his self-worth no longer depended on the next candle. 3. Data. Truth through repetition. Daniel's journal became his second edge. He didn't just log trades. He logged decisions. What he felt, what he ignored, what he assumed. After 300 trades, he could see patterns that others couldn't, not in price, in himself. He realized that his brain overestimated certain setups when he was sleep-deprived, that his win rate dropped 15% after consecutive green days, and that his best trades happened within 2 hours of London Open. Data was his mirror, emotion translated into numbers. He often said, "Without data, you aren't trading, you're daydreaming." 4. Duration. Compounding patience. Daniel stopped thinking in days and started thinking in decades. He realized the most dangerous illusion in trading was speed. The idea that success should come fast because the market moves fast. But the truth was the opposite. Every short-term trader who won long-term was at their core a long-term thinker disguised as a short-term executor. He redefined success not by profit, but by longevity. Could he still be doing this 10 years from now with the same calm, the same discipline, the same curiosity? If the answer was yes, then he was winning, no matter the chart. That was the framework of mastery. Discipline to survive volatility, detachment to protect clarity, data to reveal truth, and duration to sustain growth. It wasn't glamorous, it wasn't quick, but it worked. Within 18 months, Daniel's performance chart flattened. Not into loss, but into calm consistency. No more spikes of euphoria or cliffs of despair. Just quiet, compounding progress. He had finally stepped off the emotional roller coaster. He wasn't chasing the market anymore. He had become part of its rhythm.
There was no single aha moment for Daniel. No dramatic flash of insight. No cinematic turning point. It was quieter than that, like dawn breaking over a foggy city. The change began with something most traders fear: a complete break from the market. After one particularly grueling week, 3 red days, 1 missed setup, and a final emotional revenge trade, Daniel shut everything down. He deleted his watch lists, closed his charting software,
and walked out of his apartment without his phone. For 7 days, he disappeared. He hiked alone through the Sierra Nevada, carrying only a journal and a small pack. No screens, no prices, just silence. On the 3rd day, he wrote something that would define the next phase of his career. If I can't stay still without trading, then I am not a trader. I'm an addict. That realization cut deep. Trading had disguised itself as a career, a calling, but in truth, it had become a dependency. He wasn't trading to win anymore. He was trading to feel alive. When he returned, he made a vow. Every time he felt the urge to do something, he would instead write, breathe, or walk. He would replace impulse with observation. Over the next 6 months, everything about his process changed. He removed every indicator except raw price and volume. He stopped predicting and started listening. He began to view charts not as opportunities, but as conversations, each candle a sentence in a language the market had been speaking for centuries. And slowly, the noise inside him began to quiet down. The breakthrough came one evening staring at a 4-hour chart of Euro USD. He noticed something subtle. Every big move, every so-called manipulation wasn't random. It was rhythmic. Liquidity wasn't chaos, it was choreography. The smart money didn't hunt stops for fun. They hunted behavior. They knew how retail traders felt, not just where they placed their stops. That's when Daniel wrote another line in his journal. The market doesn't punish ignorance. It punishes emotion. That insight changed everything. He stopped trying to beat the market and started aligning with it. His trades became fewer, his journal entries longer. He learned to sit through setups that didn't align with his internal calm, no matter how good they looked on paper. And paradoxically, the less he traded, the more he made. The turning point wasn't a change in strategy, it was a change in state. He had shifted from control to observation, from reaction to rhythm. He had finally learned the paradox at the heart of trading. You win not by mastering the market, but by mastering your response to it. That year, Daniel finished with a modest 38% return. Nothing spectacular on paper. But for him, it was everything. Because for the first time in 10 years, he wasn't at war with himself. He had found peace in uncertainty, and profit was simply the echo of that peace.
Daniel's transformation didn't end with emotional control. It was only the beginning of a deeper revelation. Once the noise inside him faded, he began to see something he had missed for years: the hidden code of the market. It wasn't mystical. It wasn't a secret algorithm or an insider signal. It was something much simpler, yet infinitely harder to notice when you're chasing trades. He started calling it market memory. The idea was this: price doesn't move because of charts or patterns. It moves because of human intent. The aggregate decisions of millions of traders, funds, and institutions. Every movement leaves a trace, a footprint. And just like the ocean, the market remembers where the footprints are buried. Daniel began analyzing past price action in a new way, not looking for patterns, but for reactions. He noticed that whenever price returned to an area of strong emotion, where traders had felt trapped, euphoric, or terrified, it often hesitated, reversed, or exploded from that level. He wrote, "Markets don't remember prices, they remember pain."
That line became one of his core principles. It explained why certain levels seemed magnetic. It explained why stop hunts were so predictable once you understood where emotional memory was strongest. It explained why every trader who failed left behind a signal, invisible to most but readable to those who could stay calm enough to listen. From there, Daniel developed his own method, one he never shared publicly. It combined 3 layers. 1. Liquidity zones, where emotions clustered. 2. Time cycles, when those emotions resurfaced. 3. Behavioral cues, how traders reacted when price approached those zones again. He called it the memory model. And what was once chaos began to make sense. Not perfectly, but enough to trade it with quiet confidence. But Daniel wasn't obsessed with entries anymore. He cared more about the story of each move. Before taking any trade, he would ask himself, who's trapped here? Who's about to be proven wrong? Whose pain is this move feeding? Trading, to him, had become an act of empathy, not prediction. He once described it to a friend like this: the market isn't random, it's poetic. Every swing is a sentence, every level a paragraph. You don't need to read it fast, you need to read it true. That's what the younger traders never understood. They thought success was about speed, the next big setup, the next trade, the next dollar. But Daniel had discovered that success was about slowing down until the noise revealed a pattern. And once you saw that pattern, once you understood how the market remembers, you could never unsee it. By now, he wasn't chasing money anymore. He was chasing mastery, the kind that comes when intuition and logic finally align. He realized that while 90% of traders were searching for a system, only a handful were searching for understanding. That's why some made it in 1 year, while others, even after 10, were still lost in the same cycle of hope and despair. Daniel had cracked the code, not of the market, but of himself within it.
When Daniel finally came back to trading live accounts, he did it quietly. No bold announcements, no Twitter threads, no motivational posts. He funded a modest account, just enough to feel the weight of each decision, but not enough to destroy him if he was wrong. He wanted to test not his strategy, but his state of mind. The first few weeks were uneventful. No major wins, no catastrophic losses. Just quiet execution. A calm he had never felt before. Then one morning, something strange happened. The Euro-USD was moving erratically after a surprise rate announcement from the ECB. Old Daniel would have jumped right in, adrenaline racing, fingers trembling over the buy and sell buttons. But this time, he waited. He watched the chaos unfold, like a storm from a distance. He saw where retail traders were piling in and where their stops were likely placed. He smiled. "Right there," he whispered. "That's where they'll get caught." And they did. The market spiked, took out the stops, then reversed with brutal precision. Daniel entered, small size, perfect timing, emotionless execution. He exited 15 minutes later, quietly closing a trade that would have made his old self scream in triumph. Now, he just sat back and wrote one word in his trading journal: alignment. From that day forward, Daniel's equity curve didn't skyrocket. It stabilized. And that, to him, was victory. He wasn't trying to conquer the market anymore. He was cooperating with it. He began journaling differently, too. Instead of writing down profits and losses, he documented emotions, triggers, and decisions. He wrote, "When you stop fighting the market, it starts speaking to you." Over time, he built a small but consistent track record. It wasn't spectacular, maybe 3 to 4% monthly, but it was sustainable. Friends who'd seen him lose everything were stunned. They thought he'd found some magic indicator. He hadn't. He'd just found clarity. Months later, a young trader named Eric reached out to him. He'd been following Daniel's posts quietly for years, back when Daniel was loud and reckless, all fire and no discipline. Eric had burned 3 accounts trying to trade like Daniel used to. Now, seeing Daniel's calm demeanor, he wanted to learn from him. Daniel hesitated at first. He wasn't sure he wanted to teach, but he saw himself in Eric. The same hunger, the same confusion. So he agreed, not to teach a system, but to teach a way of seeing. He started with a simple exercise. For 2 weeks, Eric wasn't allowed to take a single trade. All he could do was watch. Observe how the market manipulated emotions. Notice where pain was likely to exist. At first, Eric was restless. "I'm wasting time," he said. Daniel just smiled. "Patience," he replied. "You're not wasting time, you're training perception." 2 weeks later, Eric saw it, the same footprints Daniel once missed. The traps, the sweeps, the emotional rhythm of the market. His first live trade after that? A clean, calm execution. No thrill, no panic. That was the moment Daniel realized the lesson he'd learned through a decade of losses could now be passed on, in a year, or even less, if someone was willing to listen. That's why some traders make it fast, and others never make it at all. It's not about time, it's about transformation.
Eric didn't become a profitable trader overnight. No one does. But something inside him changed faster than even Daniel expected. He wasn't chasing trades anymore. He was listening to the market. He journaled every observation, not just price action, but emotion. Every hesitation, every candle fake-out, every burst of liquidity. It all started to make sense. Daniel saw in him what he wished someone had seen in himself years ago. A student who valued understanding over results. One night, after the New York session closed, Eric and Daniel were on a call. The charts were still open, glowing faintly in the dark. "Eric, Daniel, how did you know when you were ready? Ready to be consistent?" Daniel paused for a long time before answering. "I stopped feeling the need to prove anything," he said. "When your decisions no longer depend on the outcome, that's when you finally understood the market, because that's when you finally understood yourself." From that day, their mentorship became something deeper, not just about trades, but about philosophy. Daniel taught Eric what he called the 3 mirrors of mastery. 1. The market mirror reflects your discipline. Every bad trade shows you what emotion you haven't mastered. 2. The time mirror reflects your patience. The longer you can wait, the clearer the picture becomes. 3. The inner mirror reflects your identity. You can't outperform your self-image. If you see yourself as a loser, the market will prove you right. These weren't motivational quotes. They were battle scars turned into principles. Lessons carved from pain, loss, and endless self-reflection. As months went by, Eric started to find his rhythm. Not because he copied Daniel's trades, but because he started thinking like him. He learned to zoom out, to see the invisible layers between price and psychology, to understand why markets don't reward effort, only clarity. Sometimes he'd still message Daniel mid-trade. "I think this is a trap. Liquidity above 1.0850. They'll sweep it, then reverse. Daniel would just reply, "Good. Now ask yourself, who's trapped emotionally at that level?" That single question changed the way Eric saw every chart. One day, Eric sent Daniel a screenshot. His account, finally profitable after months of steady growth. No parabolic gains, no overnight success, just slow, consistent equity rise. And under it, a short message. "It took me 1 year to do what you took 10 to learn." I guess that's the real edge. Borrowed experience. Daniel read that message in silence for a long time. It hit him harder than any winning trade ever had. Because he realized something profound. The greatest trade he ever made wasn't in the markets. It was passing wisdom forward. From that point, he began sharing more. Not signals, not predictions, but perspectives. He started writing essays, giving talks, mentoring small groups of traders who were tired of chasing luck. And though he still traded quietly, his real work had shifted. From building wealth to building wisdom that lasts. He understood now that the market was never meant to be conquered. It was meant to be understood, respected, and eventually taught. That's what separates those who make it in 1 year from those who never make it even after a lifetime. Because the truth is, the goal isn't to win trades. The goal is to become the kind of person who doesn't need to win to know they're right.
Years later, Daniel sat by the window of a small cafe overlooking the city skyline. He wasn't trading that morning. His laptop was open, charts on one screen, but his eyes were on something else. A message from Eric. "Daniel, I just got funded by a prop firm. It feels surreal. But the funny thing is, I don't feel excited, just calm. Like it's exactly where I'm supposed to be." Daniel smiled. That sentence, "just calm," said everything. It meant Eric had crossed the invisible threshold that few traders ever do. The point where emotions no longer dictated outcomes. He leaned back and thought about the irony of it all. The question that had started this entire story, why do some people succeed in 1 year while others fail for 10, was no longer a mystery to him. The answer had been right there all along, hidden not in the charts, not in the strategies, but in how traders process pain. The ones who succeed fast aren't necessarily smarter or luckier. They simply learn faster, not how to win, but how to lose properly. They treat every loss as a mirror, every mistake as data. They detach their identity from their equity curve. Meanwhile, those who fail for a decade often build a fortress of pride around their beliefs. They keep tweaking entries and exits, thinking success is a formula, when in truth, it's a transformation. Trading doesn't just require skill, it demands the death of the ego. And most people aren't ready for that kind of surrender. Daniel remembered his own decade of losses, the nights when he'd stare at charts until dawn, trying to figure it out, not realizing he was the one being figured out by the market. Every trade he forced, every revenge order, every emotional click, it was the market holding up a mirror, whispering, "You still don't get it." And yet, that was the process. It had to hurt before it could teach, because pain is the only language the market speaks fluently. Now, sitting there in that quiet cafe, Daniel realized something else. He wasn't teaching Eric to trade anymore. He was teaching him to see. To see that trading isn't about prediction, it's about perception. Not about control, but about alignment. When you finally stop trying to force outcomes, you start flowing with probabilities. You start to realize the market isn't chaos. It's a reflection of human behavior. And the moment you understand yourself, you begin to understand the market. He opened his journal, something he hadn't done in months, and wrote a single line across the page. Success in trading has never been about time, it's about the speed of your self-awareness. He closed the book and smiled. Outside, the city moved like the market. Noisy, unpredictable, full of illusion, and yet beneath the noise, there was always a rhythm. That evening, he received one last message from Eric. "Thank you for everything. I think I finally understand why you trade the way you do. It's not for the money, it's for the silence it brings." Daniel replied simply, "Welcome to the other side." And with that, he closed his laptop, finished his coffee, and walked away. Not as a trader chasing the next setup, but as a man who had finally made peace with the market and with himself. Because in the end, that's the real answer to the question. Some people succeed in 1 year because they listen. Others fail for 10 because they fight. And the market, like time, always rewards the ones who stop fighting and start understanding.